Welcome to the Rick Helps Real Estate Traveling Roadshow edition. Going to share some numbers with you that at first glance would make you think that the market's kind of shifting and that things are leaning more in favor for sellers. But when you kind of dive into the details like I like to do, I think you're going to see that this is just a temporary little blip in the data. So let's go over some of that. What am I seeing? And when looking at the Cromford Market Index, the chart, everything turned green. Looks great, right? Paradise Valley up 37%. Now, this is a proprietary algorithm here that they put together to measure supply and demand. So anything over 110 is considered a seller's market. Anything around 100 is balanced, and then it gets down to a buyer's market after that. And you can see that anything from Glendale, Avondale, Scottsdale, Cave Creek, Chandler, those are all considered seller's markets right now at the moment. Fountain Hill's going 8% up. Chandler going 8%. So what's driving this? And if you're a subscriber to my newsletter, you will get this chart tomorrow morning at 7 o'clock along with their commentary on the bottom so you can kind of read it at your leisure. But what drives it? Well, for now, inventory is not climbing and sales are kind of staying right where they at. They went up about 100 homes over a 7-day period. So we're rocking at about 2,800, which is kind of where we've been. So for sellers, we're not seeing an increase in sales that you can take advantage of. You are seeing a decrease in inventory. Why do I say that's fleeting? Well, the increase in inventory is because the amount of new listings coming on has been fairly steady at about 3,000 homes on a 7-day average. But the past few months, what we've seen is an increase in expireds. People that listed January, February, March. In the 1st of April, we had about 1,200 expired listings. So that shaved off the available inventory out there. Some of them came back on the market, tried again for spring. And then in the end of spring, as we got into summer, that number spiked up again over 1,000. So that eroded the number of homes that were available. And that continued, although the velocity, the number of homes that are expired is now starting to decline. So it always hits the first through the 5th of the month. And we didn't get much over 850 this time. So as we got into summer, the number of expired listings went down. The number of homes that went back on market has been holding fairly steady week after week. So there's no anomaly there. The result of that is this, in that we've seen a steady decline in listings that are on the market. The expired listings started showing up about here, and it's been continuing ever since. But nothing in this data tells me that sellers, things are going to get brisk. Now, I heard from a viewer the other night, and she was in Olympia, Washington, of all places, because I'm kind of up by there. She said her realtor told her that interest rates are going to go down in September and FOMO is going to start again. And I said, I don't agree. I think there'll be an uptick if rates go down, but we're already seeing them down now. Where's the uptick? We're not seeing an uptick in mortgage applications. Affordability is still a problem, but sellers don't take that as a negative to listing your house, because there is still plenty of activity, enough to where if you're priced right, your home will move. For buyers, they are definitely bargain shopping. Some people are finding out it's not as much of a bargain as they thought they could get, but they're still getting the price shaved off a little bit. Sellers are not really jumping in right now and adjusting their price as we're deep into summer here. We're sitting here at 2,627 for price cuts, and you can see where they've been. So that's not happening. What we are seeing, though, and this continues to climb, is seller contributions. It says an average of 10,000, but it's all over the map. But the percentage is what matters. It's 57% of homes sold have contributed towards closing costs or rate buydowns. That's just a given. If you list and you think you're not going to contribute towards closing costs, then just pull it off the market, because nobody wants it. Hate to tell you that. Buyers are pretty savvy right now. They got a lot of tools at their disposal. Sellers, you do as well. So it's not, I wouldn't call this a turnaround, but you're going to start seeing some news and some articles saying, is this the bottom? Is this a turnaround? Now, in real estate, you can't really fish and say, where's the bottom? Now I'm getting in. It gets very challenging. You don't want to treat the real estate market like a stock. If you're buying, continue to look for that home that you want as rates start to improve. Get your financing in order and get ready. And that if you do see something, you can pull the trigger. There's some decent rates out there, about 6.4 right now, 6.5. Most of the forecasting that came out at the beginning of the year said that by the end of the year we'd be about 6.4, and we're headed that way. Do I see any major changes coming in September and October? No, I see more of the same. So it's not a brisk market today. It's not going to be a brisk market in September. Slightly improved seasonally. There's always a wave of optimism that comes at the end of each season. In other words, January, everybody was optimistic. It's a new year. In fact, there were surveys out there that said that 73% of sellers were confident that they would get more than their asking price. This was in April, and it was a national survey. It's like, I mean, that was a huge disconnect. If you're following the numbers, that's how you make your determination. So the one viewer that we had that said, well, my realtor said, well, did your realtor provide any data to back that up, or was it just a rah-rah meeting from a sales meeting at the brokerage? Go out and tell everybody that everybody's going to be hitting the market and we're going to have some FOMO out there and you need to be on board. So ask the right questions. What makes you say and think that September, October is going to be better? That's what I look for here. Do I see an increase in sales? No, we're hanging about 2,800. Rates have gone down. They've already baked that number in the cake, assuming that we're going to have a rate cut in September from the feds. May make a difference in mortgage rates, might not. Sometimes they cut, rates go up, so you just have to watch it. So I don't see any indication that we're going to see a plummet in mortgage rates. I honestly don't want to see that. I'm kind of conflicted. I don't want to see it because of what the effect would be on real estate. I don't want it to get ignited and overinflated again. But we do need some help with our national debt, and lower rates will definitely help with that. So all depends on what side of the fence that you're on. But again, if realtors are not economists, I'm not an economist. I just have access to some data. And in looking at that data, I pay for it. I get to look at it on a daily basis. I track it, and it shows me what's going on. And I look at this in particular. I look at the number of new listings, which is the yellow line here, and then the black line is number of new contracts. You can see how that's flat. There's nothing spiking up. Yeah, it went up just a little bit. These are holidays. These are including listings that have expired. So the big dips is Memorial Day, 4th of July. And so that's one of the numbers that I like to look at, and compared with what I see in the Cromford market data. As a rule, they pretty much match up. Now I like to go in and I like to drill down by zip code and see if there's anything going on, because it's all real estate's all local, right? So here's 85226. It's a very popular zip code in Chandler. They like that school district, the Kyrene School District, and it's reflecting that their months of supply is 2. That's a seller's market, folks. If you're in 85226 and you list your home, you're not going to be sitting on it. You're going to find a buyer. Now, if you go to another neighborhood that I actually used to live in, this is 85014, it's a different story. They have a 5-month supply of homes. So if you're selling up in that zip code, it's going to take you longer. Normal is considered 4 to 6 months. We haven't seen normal in years. Going back last year, they were 3.4. So they went from 3.4 to 5.5. Now, this QR code that you see up here, where do I point out? There it is. That's my data store. So if you want an individual zip code report for your zip code, go ahead and go in there. And it's got a paragraph in there. You can ask for whatever you want. I'm paying for some artificial intelligence programs that extract the data in our market, and I provide those for you. I had to go through a few of them to find some that were accurate, because some were way off. But anyway, that's the data store, and take a look at that and tell me what you think. Submit the form. Now, if you submit that form, it does go into my CRM, and you will hear from a artificial intelligence assistant. Hi, Rick. Can I help you find anything? If you don't want that text, you don't want that, all you got to do is type in stop, but it'll automatically spit that out, but you can turn it off. If you don't know how to turn it off, you can get a hold of me and I'll turn it off. But it's pretty good. It'll make you feel like you're having a natural conversation, and AI is really good at knowing what you're looking for, and it also reaches out to me and says, hey, Rick, Jim and Sally are looking for the following home. Can you jump in and help them? So when you're looking at your zip code, I'll just randomly scroll down and pick one here. Here's 85048. That's around Ahwatukee. They're at a 2-month supply. You can see where you sit in relationship with the market. Now, there is some sticky inflation and unclear outlooks that are out there, and this is why the market is stalled. This is from the Federal Reserve July 30th decision to hold short-term interest rates steady was based primarily on concerns about inflation, and the latest data backs up. Consumer prices rose in June, with core prices rising 2.8 year over year. And it says, while the Fed will have new data to assess before September meeting, the June consumer price report reinforces the difficulty of getting inflation down to the 2% goal. For now, it's hard to say whether the Fed will begin cutting rates in September, according to Lisa Sturtevant, chief economist, Bright MLS. Everybody's debating what the Fed's going to do. The president wants them to go down 100 points or more. There's some Fed chairmen that want to cut, some that want to stay. We don't really know, but it's the uncertainty of it that's making our market go, okay. Now, I will say this. Let's say rates go down in September. Buyers will wait because they're going, it could go down further. Now, if during that period you see rates start to go up, I guarantee you buyers are going to jump in real quick. They're going to go, oh no, I missed an opportunity. I got to get in. I've seen contracts increase more when rates are going up than I do when they're going down, because when things are starting to trend one way, we tend to follow it. Don't we do that a little bit with stocks? Oh, it's going up. I'm going to hang on to it. Oh, it's going down. I probably should sell. Again, not saying that real estate's like stocks, but it is harder out there. Here's our real estate listing success rate. Pretty bad, folks. Again, you can drill down by zip code and see what's going on in your area. But last year, our success rate was a respectable 71%. 71% of you were getting a contract when you listed your home. Right now, it is 62%. I've seen some neighborhoods that are below 50. So you better have it priced right. Excuse me, Jessica and I did a video this week on, how do you price in this market? And we sit there and just have a natural conversation for about a half an hour and talk about what we look at and what you should look at. And Zillow is not the number that you want to look at. In fact, any of the online programs, click here and get a home valuation, forget about it. It's just a calculation. There's a lot of new AI programs coming out there. I don't care how smart they are. They have not seen your kitchen. They don't know the improvements you made or the improvements you haven't made. They haven't really taken a look at what's going on in your neighborhood. They just can't rely on it. You can get it as a rough guide, but even in a rough guide, I pulled up one as an example when Jessica and I talked, and it was like $650,000 or $674 on Zillow. And then we looked at a program called House Canary, which is what appraisers use, and it pulled it down to like $585. I mean, now what do you do? So you really have to have that discussion, a meeting of the mind saying, let's look what's sold, what's sitting, what's my competition, where should I price myself in this market? And then at that point, you can find out whether or not you can have a starting point on a listing price. Then you have to have that strategy. It's been 2 weeks that I see any activity. If I haven't, how far do I need to go down? That's how I'd like to see you approach the market right now. It's one where you got to be very strategic and you got to really know what you're doing. The days of listing your home and saying, okay, we're going to have a lot of traffic, here we go, are done for now. May creep up in a year, don't know. We're starting to get towards the end of summer now, and the closer we get to the holidays, the more you're going to see prediction season, my favorite time of the year. Then I get to come back in July and go, how right were they? Hard to tell. And if you haven't signed up for my newsletter, that's in the link down below. Don't forget the zip code report. As usual, if you have any questions, shoot me an email at rick@rickhelps.com. Take care.